What up, HyperChange? Welcome to another episode of Moonshot Monday. Last week, one of my roommates was showing me Yelp stock. We're going through the IR deck, bam, an idea hits me. And trust me, this is way above our pay grade, but we're doing it anyway. Yelp's entire IR strategy is completely broken. They're not focusing on their vision at all. We think that this is a big reason the stock trades at a lackluster multiple, and there's a huge improvement to be made just in terms of Yelp telling its story to investors. Hear us out. The first thing about Yelp is we think they need to double down, build on not only being a platform for reviews, but accept the fact that they could be an independent platform for data on all local businesses. What does this mean? We think they need to start incorporating sustainability data into their platform. What does this look like? Organic certifications for food, non-GMO certifications, gluten-free. The company Where Food Comes From that we've talked about a bunch has a million different certifications, and they're delivering products to restaurants and different businesses that are already on Yelp. Communicating that information with viewers on Yelp we think is a big opportunity. Things like, do they recycle? Do they compost? These are other avenues of sustainability that I would want to know like local businesses are doing or not, but that I don't have info on. So we think Yelp could expand its moat by going beyond just reviews and like really owning the fact that they're a data platform for local businesses, and consumers are demanding more so than ever to know the sustainability profiles of the businesses they support. And I think that's like a perfect push for Yelp to expand into a new category of data, is to start telling consumers how sustainable their local businesses are, in addition to like how good their food is and how good their service is. So that's just one piece of it. The second piece of it is Yelp's entire IR strategy revolves around stealing local advertising revenue and like pitching them as this advertising company. The last conference call, all of their investor presentations that I listened to were all about like productivity of the sales force and this nitty-gritty stuff, and the entire profitability of the company is focused on non-GAAP like revenue and income. So I think they need to scrap that. They need to cut back to the point that, okay, Yelp, you're not profitable right now if you take into account stock compensation, so stop telling people that you're producing like an adjusted EBITDA profit, because it makes no sense. You're not fooling any smart investors, and you're just muddling the story. Yelp, as you can see here, has grown its revenue at an impressive clip since its IPO. Their growth rate has slowed down a little bit this year, and they're only projecting 20%. But we think if you take a step back and look at this, like this is a business that was only doing a couple $100 million when they IPO'd in 2012. Now they're about to cross $1 billion in revenue sometime in 2018. So like a lot of excitement and growth in this platform, but they're just not communicating it correctly. Like growth companies like Amazon, Tesla are doing a great job at explaining to investors that they're growing to capture a bigger and bigger piece of the market, and therefore they're operating at break even to meet those opportunities. Yelp is not communicating this at all. They're trying to tell you they're making money, but really they're not if you take into account stock-based compensation, which is a real expense. If you look at this discrepancy between the company's EBITDA and their operating income, you'll see there's a massive gap, and it really just confuses investors. So we think they should take a step back, simplify, own up to the fact that their business isn't making money when you account for the stock-based dilution, because they're building towards this vision of being an independent data platform for local businesses. This means not only reviews on the food and the service, but also expanding into sustainability and like going into the carbon footprint of each one of these businesses that they cover, because we think that like increase in data, and the more data that Yelp can provide on its platform, the bigger its moat. Jeff Bezos has this great saying that you can either hold a rock concert or a ballet in terms of your investor relations strategy to investors. The one thing you can't do is say you're hosting a ballet and then have a rock concert. I think that's exactly the problem going on at Yelp. They're a growth company that's operating at break even to capture a massive opportunity, and they have a track record of a really impressive growth rate, but they're not pitching that in their IR deck. They're trying to tell you they're a profitable company making over $100 million in earnings, when that's just simply not the case if you take into account stock-based compensation, which is a real expense. So we just think they're confusing investors, and this is leading to the fact that the company is only trading for $2.3 billion, despite the fact they have $500 million in cash, no debt, one of the cleanest balance sheets we've ever seen. They're continually making cash flow because a big piece of their compensation, as we said, is in stock, which is a non-cash expense. If you minus the cash from their valuation, they're only trading at $1.8 billion. Given the company is going to hit $1 billion revenue run rate sometime next year, we think the company's trading at less than 2 times price sales. This is way out of whack with every other internet company with their depth of network effect and moat, and the biggest reason behind this discrepancy, we think, is just simply a muddled and confusing investor relations approach. Drop it all, simplify, stick to the fact that you guys are the independent provider of information on local businesses, own it, expand in sustainability, and we think you can get a much higher multiple from the market, and they'll really begin to understand this growth story on a long-term horizon. For those of you that don't know, the CEO of Yelp and founder is a guy called Jeremy Stoppelman. He was part of the PayPal mafia with our guy Elon Musk and Peter Thiel. Like, this guy's been running with the Silicon Valley bigwigs for years, over a decade, maybe 2. So like, he's got an impressive track record. He's kind of like a shy, nice guy who seems like maybe sort of a pushover in board meetings, and I don't know. Actually though, that's what I think is happening, is like, he's like saying the vision, and then some CFO who's a little bit louder in the meetings like, no, the market wants to hear about non-GAAP EBIT. When no one wants to hear that, we all want to hear the vision. So like, fire your IR guy, fire your CFO, whoever's building your IR deck. We could build you a much better one. Focus on the vision, because you're missing out on all the consumers who use your product. If they went to your investor website, would be totally turned off, because it's one big disclosure about what non-GAAP EBITDA means, and it's all bullshit. So we think you should just focus on the core vision and mission that you're building, because it's a great company, you have a big moat, and you're not getting the premium you deserve for it because you're muddling the story. So we just see a huge opportunity for Yelp to streamline its whole mission and bring in a bunch of retail investors who understand the story and use the app every day and become a part of this company and like watch it grow. Like, I don't want to invest in a company that's trying to improve its sales force productivity to capture a minute increase in the amount of local advertising spending. That's not exciting. I want to invest in a business that's building a platform to like display data about businesses and is expanding that moat by giving me more and more data on each of the businesses they cover, aka sustainability, the #1 thing I want to know more about the businesses I go to. Anyway, that's my rant. Moonshot Monday, we have a totally new vision for Yelp's IR strategy. Simplify, no more non-GAAP BS. That's Moonshot Monday, that's HyperChange. Let us know what you think. Subscribe if you haven't already. Peace.